Assalamualaikum warahmatullah. Bismillahirrahmanirrahim. And also a very good day to all viewers out there. Welcome back to my channel. Today's session, we are going to prepare the statement of cash flow using the direct method. And this will be showing an example which will help you to prepare the statement of cash flow using direct method step by step. Okay, let's look at the question. So I have already prepared a question for you, where this question has a statement of financial position of a company called Limelight, a business that involved in selling of lamps and lighting. That is the principal activities. And normally for a direct method question, you are given the comparative statement of financial position. So there will be 2 years financial position that will be given to you, right? And you are also given a statement of profit or loss. Sometimes you may be given the statement of changes in equity. Yeah, you may be given the information on the retained earnings, as well as the information on the movement of reserve, right? But here you are given a statement of profit or loss, which is the income statement of that company, and with some additional information or other additional data that might be relevant to be used for the target of preparing the statement of cash flow using the direct method. So all this information will be relevant for you to calculate the cash outflow and cash inflow from the activities of the company that is divided into 3 activities. As you know, cash flow will have 4 sections. I go to the section to let you have an idea of what we're going to do. Yeah, you will have 4 sections, where section 1 will be showing the cash flows from operating activities. Section 2 will be cash flows from investing activities. And section 3 will be showing the cash flow from financing activities. And the last section, which is section 4, will be having cash and cash equivalent, right? So let's start. Okay, so as I said, you are given a statement of financial position, and you are given a statement of profit or loss. So you might ask yourself, what should I do first? Of course, you need to go and read the question first, right? If you read the question, you are asked to prepare the statement of cash flow for the company for the year ended 31st of December using the direct method. So if you're asked to do the direct method, the first thing that you need to do is to prepare the blank statement of cash flow, the template itself, that shows the 3 sections as a start. So you should have your title, of course, the name of the statement, which is statement of cash flow. Make sure you have the correct year end or the reporting date. You should have the 4 sections that you will divide into cash flow from operating activities, cash flow from investing activities, from financing activities. And the last 3 rows in the cash flow is one of the most important section 4, that will tell you the changes, which is either a net increase or a net decrease in cash and cash equivalent. As of now, we are not sure whether it is an increase or decrease. We need to go and check that, right? So I somehow have put the answer here, so I will just delete this for a while, right? Okay, so that we can work this all together, right? So let us start now. We have already drawn the template, right? So when you have already drawn the template, we are now going to start off doing the second step. So the step 1 is to prepare this template. Step 2, what is step 2? Okay, step 1 is to prepare the template. So let's go to step 2. Okay, my suggestion is in step 2, you should determine the cash and cash equivalent itself. And after you have determined the cash and cash equivalent, which is the section 4 item of your cash flow, you also need to determine the net changes, because this is one of the simplest things to do. So to do that, you should label correctly the opening balances and the closing balances of your comparative SOCF balance, and then determine correctly what are the cash and cash equivalent. Then only determine what are the net changes. So I've done the labeling for you here, right? I've done the labeling for you. Yeah, this opening column is your 2000x3 and the closing balances is in 2000x4. Sometimes you may have opening balance on the this side, the right side, like our case, but sometimes it may also be on the somewhere in the right, in the left side, somewhere on the left side. So you have that. So now you need to go and determine what are the cash and cash equivalent. So if you can go through, if you have already learned much earlier, and you go through my lecture, you would see that the cash and cash equivalent will normally comprise of this item. Can be cash in hand, cash at bank, short-term investment, marketable securities, right? And can also be bank overdraft. So in our case, you don't have all those items in one statement. You just have one particular item, which is this cash and bank balances that I will highlight in green, right? I will highlight this in green. So I'm using green here to highlight. So that cash and bank balances, you can see at first it was 55,400 and it goes up to 67,000. So there is a net increase here. So net increase because beginning balance now has increased. So the cash balances has gone up and the increase is a net increase. If you have vice versa, the increase is a net decrease. So that figure will be transferred to the cash and cash equivalent here. So I will transfer it here, right? And therefore your cash and cash equivalent would be 11,600 for the increase, right? And then you have your 67,000, which is the ending balance, and the beginning balance, which is the beginning balance is the opening balance, 55,400. So this figure will have to be now transferred to the statement. So if you transfer this to the statement, you will see that the total is what you transfer. So since there are no other information here, the total is 55,400, 67,000 and 11,600 respectively. So you can see the arrow that I show you, where this one is the beginning balance, so it will be the beginning cash and cash equivalent for the company, and this is the at the end of the year, so it will be the one at the end of the year for the company. And what is more important is that the case here that you have a net increase, so 11,600, because beginning balance are less than the total ending balance. So therefore the difference of 11,600 here, that difference will be put as net increase in cash and cash equivalent. So you have to adjust this, and maybe you can leave this blank, not to put like that. You put it later, that's also fine. So net increase in cash and cash equivalent. And for your information, this is the total from the statement of cash and cash equivalent, section 4, which is at the bottom of it. You have the notes, right? And for your information, the total for the cash flow statement, 11,600, will also be the total that will come from the combination of total from operating activities, total from investing activities, and total from financing activities. So these three total, Y plus U plus S, will also made up later 11,600. So if you do your three activities later, you will see that the total from these three activities must come back to 11,600, where we are trying to say that if we have a net increase of cash and cash equivalent of 11,600, what is the spread of that figure into these three, or how do you split that figure into these three activities? What are those effect of having this 11,600 in terms of the detailed analysis according to the activities of you have here in the cash flow? Okay, so we are done with that. So now we go to step 3. For step 3, you should classify the information items in the SOCF so that you won't get confused which one is under which activities. So to avoid that, what you can do is you can use some highlighter pens, or maybe you can just use some different ink, right? So you can use different pens of different color so that you know which activities belongs to which. My personal choice today is I'm going to use purple as my highlighter for my operating activities, blue for my investing activities, and brown for my financing activities. And you should by now know what is operating activities, but I will start off with the bottom one first, which is I will be looking at what are the financing cash flow that might be the case that you may have in the statement of financial position. So for your information, financing activities, this is a kind of revision, comes from the movement in share capital and reserve, and also movement or changes in the in your non-current liabilities, right? That relates to cash flow, which is either cash inflow or cash outflow. So in our case here, we need to go and check what caused the changes to the share capital, what caused the changes to the retained earnings, and what are those that relate to cash flow, with regards to those accounts. Same goes for this part, which is our non-current liabilities. Here you just have one. You may have many more, right? So for today, there is only one. So I use brown. And then, is there anything else? No more. So that was just focusing on the equity and the non-current liabilities. Now we go and look at what is under our investing activities. To recap, investing activities has something to do with the acquisition and disposal of long-term assets like non-current asset and investment. So this section of cash flow, we need to go and investigate, and I'm using blue for that. So I use blue. So that is the blue that I have chosen, right? And we also need to check in our current asset section if there are any example of some cash flow from investing activities. We need to check if there is any interest receivable here, none. If there is any dividend receivable here, also none. Should you have that, that should also be highlighted as cash flow from investing activities, because dividends and interest income are as a result of your return from the investment in equity and also in debt instruments, right? So no. So we are about to finish doing the classification, right? Classification of the information, and the remaining item that you have here will then be from your operating activities, which I will use purple. Okay, that's my purple. And that is also the case is for our current asset, which is our operating assets. We need inventories to operate the business. We need customer to sell our goods, right? And sometimes we pay our expenses earlier than we have to, right? And we also have your current liabilities section here, which is your current liabilities, which is your operating liabilities. Done with that. Okay. We have also need to check if you have other items. Sometimes you have more items in the current liabilities. After you have done that, that is step 3. We now do step 4. What is step 4? Yeah, step 4 is for you to reconstruct your T account. Why do you need to reconstruct your T account? Because you want to trace, those transactions that has the cash effect to the 3 activities that we have classified. Right? We need to go and transfer the opening balances and closing balances of your asset, liabilities, equity that you have in the SOPL to the correct side. So opening balances should be transferred to the debit side if it is an assets, and credit side for the closing balances. For the liabilities, the opening balances should be transferred to the credit side, and the closing balances should be transferred to the debit side of the liabilities and equity. You need to do that. Right, and then you need to trace whether those changes in those balances, that have any cash effect in the form of any cash payments that may have been generated or been used during the year, or any cash receipts. How much is the total cash receipts throughout the year coming from those different T accounts that you have opened up. So you need to go and also post to the T account other relevant information, so that at the end you'll be able to find out cash payments and cash receipts to the parties that are related to, right, which under operating, investing and financing. So you have to review your asset, your liabilities, your equity thoroughly, and need to analyze other relevant information to also trace for non-cash transaction and non-operating items that may have also impacted how much is your cash payments and how much is your cash receipts. Cash payment will be denoted as a negative outflow, which is an outflow, negative figure, and cash receipt will be as it is, which is a positive inflow, which is an cash, the so-called cash inflow. So let's do that. And we will start off by, again, bottom up. Bottom up means we are going to investigate what happened to the investing activities first. So the investing activities that we have to investigate. I am starting with that first. Okay, so let's go to the statement of profit or loss, and also statement of financial position to investigate that. So I will start off with the most important thing that investor will look upon, which is the retained earnings or the profitability of the company. So now if you check, you will see that there is an if you look at the case here, you may notice that there was an increase, right, in the retained earnings. There was a decrease in the retained earnings. If you check the balances here, there was a reduction in the retained earnings of 17,520. An increase in the share capital of 25,000, and a decrease in the loan for 13,500. So we need to go and check what caused the difference. So what I need to do is to post all these 3 figures, this opening to the credit side. Same goes for the retained earnings, opening to the credit side. Same goes for your loan. All the opening balances to the credit side of the accounts respectively. And the debit side will show the closing balances. So do that first. Okay, I've done for you this part for the first item, where the first item is the one regarding retained profit. So the purpose of doing this is to go and find out how much has caused the changes to the retained profit and how much relates to cash. So I have already set up that. First, you put your balances, right? Then you go and take up your retained profit figure. Where is the retained profit figure? You can find it here. Retained profit for the year 99,400. This one should be transferred here, right? And the balancing figure will be the dividend that were paid during the year. Dividend that you paid during the year is normally the last year's interim dividend, right? And sorry, the last year's or the prior year final dividend, and the current year, the current interim dividend. So basically these are what you paid. So in this question, nothing is informed, but we will assume that this is the dividend expense, not dividend paid yet, dividend expense. So the dividend expense will be the current interim dividend, and normally together with any prior year final dividend. So then I post that to the dividend payable account. There is no dividend payable here in the current liabilities, but I'm just trying to check if there are any balances given here. So there are no balances given. So whatever dividends that were derived from the retained profit is actually the dividend that you paid. So you have the first item, which is your cash dividend paid, right? And this item, because it is about cash, we will just focus on the item that relates to cash, either cash paid or cash received, meaning that bank account has been credited. So when bank is being credited, there is an outflow. So that will be transferred to the statement of cash flow. So that is working number 1. And working number 1 is showing the item on dividend. So I put this as a negative cash flow, and this is an outflow or cash payment. Now we go and do the same to our 2 items, which is share capital and reserve. So we are done with this. So whatever you are done with, I would suggest you to put a tick. So you can put a tick here for your cash and bank balances done, meaning that you have checked. You have checked for this, and now we're trying to check for share capital and our non-current liabilities. So go and post that balance that you have back to your statement or to your T account here, sorry. So if you do that, you post the loan, post to the correct side. That should be on the credit side. The beginning balance, the opening balance, yeah, should be on the credit side. And you also need to put the closing balance. Same goes here. And then there are no information whatsoever about loan given in the additional information here. Nothing informed about they took new loan whatsoever. So you would assume that the reduction from 49 to 36,000 is due to cash repayment. So this cash repayment again is your financing activities, the one that you credit your bank account and debit your loan. So you can see that I also numbered my working. This is working 1 and this is working 3, because I actually have done my ordinary shares to be my working number 2. So it does not really matter what is your order as long as you have all the workings. But the reason we have working here is to be more systematic and organized. So you have that, and then we go and do the same for our share capital. We put the balance, and you have some information regarding issuance of shares. So here you are informed that issuance of shares were for cash. If it's were for cash, and this is coming from financing activities, it will generate some cash inflow. You also need to check if there is any bonus issue here, because bonus issue is not a cash transaction. It is a non-cash transaction, but may have affected your cash flow here. You also need to check if there is any payment that involves relating to ordinary shares, maybe like purchase of own shares during a share buyback scheme. Right? None. So at the end, our different or the balancing figure is on the credit side. So here you have 2 outflow and 1 inflow, and these must be transferred to the financing activities. Financing activities. So you can see that I have already put the word or the abbreviation FA. FA stands for the financing activities. I have put the key here as well. So let's transfer that, all that to the correct activities. So I put that, and I have already transferred here to cut short the presentation. And I also put the workings, order of workings to give you an easy cross reference, right? So I put the figure here, and the proceeds from issuance of shares is an inflow because it generates cash. Debit bank, credit only shares. Repayment of loan is an outflow because during the year, this is the total that you have repaid by crediting your loan account. Sorry, crediting your bank account. So then you can total up your total from your financing activities. If you have a negative figure, like in our case here, that is net cash use. Should you have a positive inflow, that was cash inflow, right? Should be denoted here as net cash from, or net cash flow from financing activities. So you are done with the first last two sections. Now we move on to cash flow from investing activities. So as I said, after you have done that, you should always go and perform check here. So now we go to our item that we will do, which is our two item here. Our cash, to find whether there is any cash flow from investing activities, either an outflow or an inflow. We start off with investment. So I will start off with investment because investment is much simpler since it does not have any adjustment for depreciation. So you can see that there was a reduction, and if you see in terms of the reduction was by 30,000. So if the reduction is 30,000, right, you would say that there was maybe a disposal of investment, but you need to know how much is the gain or loss on disposal. You cannot simply say that this is my cash outflow or cash inflow. It is actually a cash inflow, right? But you cannot simply conclude it is 30,000. So what you need to do is to open up the investment account and trace that. In case there are some other information given, you can check that in your statement of profit or loss, or maybe in the long-term information here. Yeah, you are given the information here, and that was information regarding your investing activity. So you have the carrying value. The cost is the carrying value. It was disposed of at a loss. So loss is actually your expense. It is a non-cash expense. So loss shouldn't be included in the cash outflow or cash inflows. Therefore, it has to be excluded for it. So we need to go and post all those items to the investment and also the relevant account that I have opened up for you. Here is the investment account, as well as here is here, right? I will, so these are my, this is the one here, right? So I open up this for you. So the changes is a disposal of 30,000 because brought down balance is 80, at the end was 50, so there was a reduction. And the loss was put on the credit side because in the profit or loss we debit, right? And again, what you would see is the investment account was being disposed. So at the end, this is a non-cash item. For non-cash item, I'm going to use blue. Yeah, not that blue. I will highlight with the turquoise color here. This one. Okay. So that was non-cash item. So this will not be included, right? But this, our interest is this, our cash flow that comes from our investing activities, which is 22,000. So that 22,000 will be transferred to the cash flow from investing activities, and that is an inflow. Why inflow? Debit bank, credit the disposal. You can also do this straight away in your investment account without the help of disposal, and then you will transfer it here. Okay, transfer there. Yeah, so I've done that actually for my working here. Yeah, so just back to let you see. Okay, so next we move on to our next item, which is our asset that has depreciation, our PPE. So in your case here, you just have one item of PPE. Some question may have a few more items of PPE. You need to check if this is at cost or at the carrying value or carrying amount. So to know that, if you check your soft P or the statement of financial position here, you will see that there is no accumulated depreciation account. If you are having that situation, you would say that this is actually motor vehicle at carrying value, right? Motor vehicle at carrying value. So the carrying value is actually where you have already deducted the cost with the accumulated depreciation. So the item for long-term investment, we have already investigated. We have put a tick. Now we are investigating the motor vehicle. So if you have at the bottom here, somewhere here, you have the information on the cost and accumulated depreciation. What I put here is I'm going to use the color that you can guess, which I'm going to use blue. Okay. Why blue? Because that was investing activities. You can use highlighter if you want to. If you do not want, it's up to you. It's your choice, but I'm just making a suggestion. So you have motor vehicle costing 62,500 was disposed at a gain. Yeah. So when you dispose at a gain, that gain, yeah, is actually a non-operating, is a non-cash item. So for that non-cash item, the gain of 15,000, that gain must be excluded, yeah, or must be adjusted to arrive at the cash flow. And at the same time, you're also informed that there is a depreciation expense. Depreciation is also a non-cash expense. It has been recorded. Of course, you need to provide depreciation. And again, you have other information here. And it was disposed at 15,000. So the cost was the information that relates to the investing activities being disposed. So we put all those information in our account that we have reconstructed. I've done that for you. All right. So let's see what I have for you here. Okay. Right. I will show you that. It is here. Okay, so open up the motor vehicle account, put the balance to the correct side, debit and credit respectively, and then put the disposal. This one is from the the information in the additional information. You can check that. So when you dispose, you actually de-recognize the cost. So when you de-recognize, you need to go and credit, and that is being debited here, right? Debited to the disposal account, or you can just maintain everything in one account, motor vehicle, and you put that at carrying value. But my motor vehicle here is at cost, so I put the balance. I took the balance from the information here, which is at cost here. This to balance, beginning 125, ending 141980. And the accumulated depreciation also, I have already taken the balances and I have already put into my account. Okay, right. So this is what you did. And let's look at the account that I prepared. Okay, disposal account, you will have that. And then I put the gain that was given. Gain is given the question. So the question information on gain is given. And the gain, right, is a non-cash item. At the same time, the question just now in the information also gives you the depreciation of 22. So we take that depreciation of 22, we put them in the depreciation here, which is under your accumulated depreciation. And remember, these are non-cash items, the turquoise color that I have chosen. So when you do this, you'll be able to find the accumulated depreciation that you have already eliminated, yes, meaning that eliminated accumulated depreciation. That is the amount, which is 12,000. So that has been debited here in when they prepare the cumulative depreciation account, and has been credited here, right? So therefore, at the end of the day, you'll be able to get the balancing figure to be the cash receipts from the disposal, and this is as a result of your investing activities. So I use purple now, so cash receipts, right? So it's this one is supposed to be not purple, it's supposed to be blue. Okay, it's blue. So these two items we have to transfer. We have already done the transfer for our investment. Now you should transfer this to your cash flow from investing. How much? The 65,500. Okay, for the disposal, and as that one is for the purchase, I'll show you in a moment, as well as for disposal, right? Let's see the item again. So here, this is the one for disposal, and the one in your investment account here, you have no additional acquisition, but for the for your motor vehicle, you have additional acquisition of PPE. So I put PPE here in case you have many more. Maybe you can do it separately, but I'm putting only as PPE, and you should know this is from motor vehicle only because one item. So this will have been transferred just now as the cash outflow, and this one was a cash inflow. Yeah, it should be okay. So the blue item there. So then you can now do the last item under your investing activities, which is trying to find out what are the cash receipt from the dividend that you have as your investment income. So if you check your income statement here, you have this dividend income, which is non-cash, and this is a cash item, but with what you call non-operating item that has the effect to the investing section. Sorry, I just make a correction here. Okay, now you have that item, dividend income. That what I'm trying to highlight here is the dividend income. So go and check your statement of financial position. Should you have any dividend receivable in the current asset? None. If there is none, mean you put the balances, none for you to put, right? So you have the dividend income that was earned in the SOPL, right? And again, this one is a non-operating item with cash effect. It is investment income from investing activities, but it has the dividend received, which is your inflow. How much would it be? That was the amount 9,000. So that one should also be put in your investing activity. So go and number all your working, like what I have done. You can do that, and after you have done that, you can perform your check here. So we have performed the check, it's already done, and now this is the information that you are looking for. Okay, so your dividend received as inflow, your disposal inflow because you debit bank. This one also you debit bank, disposal of investment. But for the purchase of PPE, that was the balancing figure in your PPE account. That one will have to be credited to your bank. So that was an outflow. I will continue with my second video on direct method to continue discussing the cash flow from operating activities. Yeah, and thank you for your attention, and I hope that you have learned the mechanics of how to prepare cash flow. And so far what we did was just up till step 4. We have not yet done step 6. Basically step 4, just to let you see, right? Step 4, we have not yet done the operating activities, because we will be doing that at step 4 and step 5 again when we do our T accounts. Actually, T accounts working that I'm doing here is representing step 4 and step 5, right? Step 4 and step 5, where we will have to review all the item and make the adjustment in step 5. In step 4 is more on opening the reconstruct the accounts. That's it. Thank you for watching. I'll see you, and I will see you. Catch me later in my next video. Assalamualaikum warahmatullah, and thank you for watching.